Hi, everyone. As shared, we do have our mortgage broker corner back in with Living the Dream Real Estate Group. And today with us, we have June from Vernon. We have Jeff. We have Jeff from here in Lake Country and Jordan from West Kelowna, all mortgage brokers that work here in the Valley. And we'll have their contact information just below the link here today. So, as we talked about last time, we were on just prior to the new rate announcement that we're going to hear from the Bank of Canada, and we all put in some of our guesses. We put in some of our prognostications to see what was going to happen and what Tiff Macklin was going to do with the Bank of Canada and our rates. And I thought it'd be fun just to start off this session today in going back and revisiting some of what our predictions were. And I'll go last because I know I got it wrong. And why don't we start with Scott? You're on the team. How about you? What was your thought on what was going to happen with the announcement this last month?
Being in a negative mindset and being on a variable, I was expecting it to go up in October, so I was super glad to see it was held. And yeah, it's hopefully we can continue this trend as we move forward.
Okay, Jordan. How about yourself?
I believe I was a little pessimistic about it, saying it was probably going to go up either that this time or this next upcoming December time. I think I was wrong. It held. I think I was saying it was going to go up. I've kind of changed my tone. I do think we might be seeing it level off or taper down more so now than not. But yeah, that's my guess.
Okay, all right. June, how about yourself?
I was hoping, I think, that we would hold. I could call it a prediction, but I just have my fingers crossed, really.
Okay, and Mr. Shinkuski.
Yeah, I echo Jordan. I thought we'd do a quarter point this fall, either December or this last October. So I'm happy to see that there was no increase.
Mm-hmm. Well, I did get it wrong. I thought even with some of the data that was coming out that was probably calling for a hold, I was really thinking that we were going to have another increase. I just really felt that that was something that uh, the Bank of Canada was really still trying to put stifle on, especially as we go into the Christmas season, into a buying season when people are really going to be active in racking up some more debt. So it was good to see. I think it was welcome. I believe that it is, as Jordan kind of, and some of us will talk about here today, is that I think it was a little indicative of what we were seeing throughout the marketplace, that people were and are really starting to cut back, and we're seeing that with our spending. We're seeing that with some of our job creation numbers, as well as yeah. So I think things are starting to come in check. So it's interesting. So I really appreciate the insights. So as we look ahead, we'll end with what our next announcement might be. So then we're going to keep this at the end of our time today. We'll go back and we'll see what's going to happen next, and we'll take some predictions, and then we'll see how we do with that. So how about Scott? How about you kick us off with some questions for the crew?
Yeah, absolutely. And I'll go shine up my crystal ball for the prediction at the end of the podcast here. But now that we've chatted a little bit about the past and what we were sort of expecting coming into that October 25th announcement, I think a lot of people are trying to figure out what's happening moving forward. So I wanted to pose a question to you, Jeff, as to what your feelings are sort of over the next 6 to 12 months as to where potentially rates may go, both fixed and variable, and just sort of getting an idea as to what you guys are hearing.
hmm Yeah, thank you, Scott. I think to start, I think it's just this big sense of relief. Well, I truly believe that rates are finished at this time for increasing. With the Bank of Canada announcement, I think that they're finally realizing it. And I believe they actually admitted that they're crippling the economy. And when the Bank of Canada actually does admit a little bit of that, they still need to say that they might do an increase in the future, but at this time they're not going to be doing an increase. So that was obviously very positive to see that there was no increase for October. Maybe the three premiers that wrote in to TIFF and the Bank of Canada, maybe they made an impact saying, hey, don't do this because you're actually crippling our economy. And that was from three large economies in Canada that did that. So yeah, Bank of Canada, we believe that they're not going to be increasing anymore. We think that 5% is probably a good maximum limit. Inflation numbers are coming out tomorrow, so it was 3.8% in September. We're hoping to get around 3.1 come October report. And you can see that a little bit with the gas prices being a little bit lower. I know up here in the Okanagan it's 165. Down in Vancouver it's 185. So it is on the decrease. Grocery prices are still on the rise, but have slowed with their increase. So that's obviously positive. Now, when I went to Save on Foods for one, I think it was one cart is $400. So I don't see the prices decreasing anytime soon, but they say they are. So yeah, so I'd say over the next 6 to 12 months, we don't see the Bank of Canada increasing. We actually see and are hoping for a decrease to maybe 4.75 come March. Inflation numbers are hard to predict over this time, especially come November, December with the spending and Christmas season. So we're just hoping that they're going to be nice to us. Now, when it comes to fixed rates really follow the Canadian bond market. And if you guys ever go online and check out the bond market, you will see that the bond market is on the decrease right now. So as it does lower, so do fixed rates. They go down with them as well. So, with GICs being at 5 to 5.5 right now, and mutual funds being a little higher, once those things start to come down, then you'll see fixed rates coming down as well. So keep an eye on the bond market and keep your ear to the ground on Bank of Canada announcement, which is happening beginning of December.
Yeah, it's really going to be interesting to see what happens with our inflationary numbers and just see how we're trending with that. Those are always really interesting indicators to be checking up on. But, as you alluded to a little bit there, Jeff, is that we are seeing so many variations. We're seeing a little, well, for the better part, an unpredictability of what's going to happen. So, Jordan, as we look ahead and there's this uncertainty of what the rates are going to be doing, and, I've got some people I'm going to be showing some condos to this week. And they are, obviously they're looking at this as like the potential of getting into a market. If you were going to be talking to these people, and you are talking to these folks, what would you be suggesting when it came to variable or fixed rates and some of the benefits? What's going to be beneficial for them and why?
Okay, yeah. So if you're just looking to get in the market, your first time home buyer, I am talking with a lot of these people and have been for the last couple of years. A lot of people are, they tried to play the waiting game and time the market. They think that rates will be coming down or the housing prices were going to be coming down, which is the first wait. And now the rates went up and now everybody's waiting for the rates to come down. The big thing I would say, would be talk to your mortgage broker, get pre-approved, see exactly where you do stand in terms of purchasing power for the fixed rates available and for the variable rates. For the fixed rates, I would probably be looking at the shorter terms, maybe around the 3 year, depending on your risk adverseness. So that's kind of each to their own with that one. I always like to ask people like, hey, do you go to the casino? If you go play roulette, you bet on the inside or the outside of the numbers. And very quickly, I can figure out if somebody should be kind of sitting with a fixed rates or a variable rate. But right now, it really does depend person to person. But the biggest thing that they can be doing right now to get into that market, which would be yeah, talk to your broker ahead of time, get pre-approved, see what your purchase power is with both of the rates, and be prepared to look at one of the slightly higher rates but shorter terms if you're going to go fixed, just because you probably will be able to capitalize on lower rates come renewal time in that shorter term that you would be going with. And then for variables, if like I agree with Jeff, I think we're kind of near the ceiling here. So if you are a more risk adverse or risk tolerant person, I should say, variable very well might be you might just slide down the whole thing with the rates there and just have savings the whole way through. It's tough to tell right now. There's a lot of kind of outside influences on the market, but if I was going to tell these people that are looking to get into the market right now, I would be saying talk to your broker, see what it looks like to be pre-approved for both sides of the variable and fixed, and then for your own specific situation, determine then what makes the most sense for you.
And you know what, June, be remiss if I didn't ask you the same question there. What would you say about the uncertainty and just about fixed and or variable?
Well, I mean, I think Jordan really nailed it. It's important to understand each person's situation. Like, what is your plan over the next few years? And how do you feel about risk? Are you in a really strict budget? Because then, you can't have any fluctuations, and we have to pay attention to that. Do you plan to sell? Are you expecting, an inheritance or a windfall of money? And, maybe you're going to move. We have to think about all those things and make a longer term plan and evaluate all of it, because it's different for each person.
Well, and I think you raise an interesting point there, June, because it's one thing for the people that are already in the market and potentially already have a mortgage and they're looking to renew, or they're moving to a different property and those types of things. Then there's the whole other side of the coin where it's those people that are first time home buyers that
Yeah.
really don't have any sort of scenarios to back up what they're thinking, and really trying to get an understanding of what they can do. And obviously with the rates a little bit higher, that's got to be a scary number for them to look at, to say, well, I'm renting right now. If I jump into a home, I've got to pay all this money and now I'm locked into this. So in this uncertain market where, from a real estate side, we're actually seeing some pricing coming down, which we're in a better situation for negotiating in a buyer's market. But at the same token, that's balanced by, of course, those higher mortgage rates. So in terms of, your philosophy in regards to a first time home buyer, what kind of scenarios would you look at and advice would you give?
Well, we'd look at their career path, where they're at in that, and actually work out the full budget, because it's not just the mortgage, right? There's all the other expenses that come with your home. Are they planning on having a baby sometime soon? Is someone going to school? And really working out the whole budget, but looking at their whole life plan. And things change, of course, but to give them a sense of certainty in what their costs are going to look like, I think is really important.
Yeah, absolutely. Jordan or Jeff, did you guys have any other advice or words of wisdom to first time home buyers that might be scared to ultimately get into the market at this point in time?
Jeff.
I always tell my clients, you buy the house, you rent the rate. So whatever makes you sleep better at night, 2-year, 3-year variable, we'll obviously, all three of us will do whatever our clients need, but whatever makes them sleep better at night is what we'll tell them to do. And I'm just probably just I'm predicting that 80% of my clients right now are all getting cosigners. I'm getting a lot of co-signing right now with the bank of mom and dad. And they're getting pulled into a lot of this as well. So part of my job now is really educating parents on what co-signing means for future borrowing power as well. So a lot of co-signing, but whatever makes people sleep better at night is what I'm telling them what to do.
Well, now that you bring that up, Jeff, what tell us a little bit more about the co-signing. Like, what are we seeing? Like, when we're saying that, for the newbies out there, what does that mean? Because there's some inhibition for people. It's like, well, I don't know if I want to be going on this with my kids. Tell us what that kind of means for them.
Yeah. So basically what happens is that if say I co-sign for my kids, which I probably will, that entire mortgage and all the house expenses, so your property tax, if there's strata involved, if there's heat, obviously, that all goes on my liability list. So if I'm looking to maybe upgrade my house and get a better mortgage, or I want to get a loan and do some traveling, I now have this extra, say, $3,000 a month charge against all of my other debts and my income just to co-sign for my child. So it does show up on my credit report that I now own 2 mortgages, even though, say, my daughter or son are in charge of paying for it all. It now shows on my list that I now have 2 mortgages. So we just really try and make sure that the parents do understand that. Now, once the renewal does come up, or if the child does get a really good high paying job and can qualify on their own, then we can take them off title. We can take the parents off title. So it's not going to be hopefully not a 25-year commitment, but you never know with today's day and age. So a lot of parents are really gung ho. Yeah, of course I'll co-sign. I'll do anything for my kids. And then when you tell them, well, do you have anything that you want to do in the next couple of years? And if they do, then obviously we have to sit down and chat about budgets and whatnot. So it can be a little bit sticky, And if the parents and the kids start to go at it, I usually just leave the conversation and let them call me back later.
Mhm. So one question I'll have for, as we're nearing, end of our time together today. So one, we're going to touch on what our predictions are for this next season of time in the next little bit for our next announcement. And when is the next rate announcement again? That's going to be coming out
December 6th.
December 6th. Okay. So we're going to put our predictions together for that. But I'd also be remiss if I didn't ask each of you about a product or a service that you have that's available right now that may be innovative, something that's a little bit, we've seen a couple of things that have come down the pipe that are maybe a little bit new for our companies or for your organizations. And if you might want to share one of those that you have that might be helpful for our listeners today, how about we start with June? June, do you have anything that's new or innovative that you guys have been doing?
Yeah, we have one of our lenders offering an extended amortization. So it's, we can go up to 40 years if someone needs to open up some space for affordability in their life right now. We can do it as a short-term solution to make life a little bit more affordable, and then get them into a position where we go back into a regular term and start to pull down that amortization period. So,
Okay. Jordan, how about yourself?
I really like, there's actually a couple different products, but basically what they're out there doing is helping people who are maybe free and clear on their home, but they want to access their equity as early inheritance towards, their kids, maybe financial future, maybe their own property, whatever it may be. There's some great programs out there that don't look at income or anything. There's no payments on them, and you can get your equity out early, and then that way you can pass it on and be able to watch and enjoy that your kids are getting the benefits of their inheritance like that. And I really think those are some really great programs out there right now.
Okay. Jeff.
Yeah, we have a cool program it's a Savers Advantage program for high net worth clients. So if they have not the most traditional forms of income, then we'll actually look at their liquid assets. So if they have 1 year of liquid assets, then we can actually lend on a one-to-one basis. So I had a client last week that needed a $1.4 million mortgage. Their income was not great, but they're self-employed, so they still have money coming in, but on paper it's not great there. But they also have 1.6 million in GICs. So we just use that as the what if collateral, and we were able to get them an approved mortgage that funded last week because they had some liquid assets.
Okay. Right on. Thanks for sharing, team. Okay, so let's get into it. So let's look at what's going to happen December 6th. We've got our inflationary numbers that are coming out tomorrow on Tuesday. Now we're going to have another announcement that's going to come December the 6th. So anybody want to start us off with what their predictions are for this next season of rates? Who wants to start?
I'll
Jeff
start
or
off.
Jordan, go for it.
Yeah. I mean, I kind of maybe let the cat out of the bag a little early there, but I do think that I was a little pessimistic, and I think I've softened on my position on that, where I think they're gonna hold it. Um, and I only say that because I really thought they would have raised it the last time and held it before the holiday season here. So maybe I'm wrong on that. Maybe the Bank of Canada is a little more savage than I thought, but just for that reason alone, that's why I'm thinking they're going to be holding it.
Okay. June?
oh yeah, sorry. I think we're going to hold one more time. That's what I think.
Okay.
Yeah.
And Jeff?
I'm going bold. I got two predictions. Number
Oh,
one,
All
as
right.
long as it's not about the 49ers.
on November 23rd, the Niners are going to beat the Seahawks 31-14. So that's my first prediction. So up by 17.
And I'm a huge Seahawks fan, so that's why he says that. Yes.
Thank you. And I'm going to make a bold prediction. The Bank of Canada is not going to raise the rates anymore at all. No more.
At all.
Yeah. I think we're done. I think 5% is the cap. I think we need to get our economy back on track. We need to get people back working and being happy again. So I think 5 is our cap.
Okay. And Scott, what do you
I
think?
like it.
Well, with all three of those experts, I agree. I agree with the hold in December, and I'm going to go one further, and I'm going to say by spring we're down at least a 0.25%.
Okay. That is bold, and I know a lot of our listeners will love that. I do think, is that we're probably going to be, this is going to be a hold. I just don't think that there's enough data for the Bank of Canada to really make a move higher in our interest rates. As far as long term, I don't think I have the biggest bull, but mine is a little bit more conservative. I don't think that we're going to see any reductions from Bank of Canada until probably middle or late summer. I really do think that they're going to be trying to keep tight reins to all of this and make it painful. I think they really do want to. I think it's almost like a retraining process that they're trying to get Canadians through right now. Is just that because of how much debt we are carrying, this is one of those wake-up calls that we've had for the last year and a half, just that we need to be really mindful of how we're spending. So that's what I think. I think they're gonna hold on a little bit longer, but yeah, I would welcome all of those predictions. So let's bring them on.
Does
Again,
that
hey
include the
team.
Seahawks prediction? Include the Seahawks one too? Sorry, is that too
Yeah,
soon?
I know. You know what? We'll see how it goes. We will see. But I want to thank each and every one of you for joining us today. It is always great to get your insights. It's always great to have you on. Of course, for all of you that are listening, we welcome all of your questions. So please do just email or text those in, and we'll make sure to be answering those next time. And as we get into this next season of time, any one of these individuals are fantastic at what they do and are amazing folks to chat with. So if you want to reach out to them, please do. You can ask them the questions and they will get back to you with some answers. So on behalf of the team and myself, we are just so happy to be living here in the Okanagan. And if you know some other people that are looking at making their dreams come true here in the Okanagan, please get them in touch with us at Living the Dream Real Estate Group. For all of us here today, thanks so much for joining us, and live your dreams here in the Okanagan.